Hello everyone, welcome to Elliott Wave Forecast.com YouTube channel. My name is Henry. Today is Wednesday, June 16. The time is around 1:30 a.m. GMT. Today we're going to be looking at the chart of the euro dollars. This is 60 minutes chart here. We can see from this chart that we ended W. Alright, the decline here as a, now we don't see the previous data before this, but we can sort of conclude from what we see here, B and C, that this is a zigzag. It has to be some sort of ABC, right, ending with W. And then we got the bounce completed here as with X, another ABC with the B as a running triangle. It's a complex pattern here. Then from here, the pair goes down again. You can see it breaks below this previous low, so it has already continued within the Y leg. Now within the Y leg, you can see in the subdivision here, we ended a zigzag ending W of Y. Alright, this is W of Y, and then now looking to complete this ABC rally to finish X of Y in red before turning lower again one more time to finish Y of Y, and then that should complete the WXY pattern in the red degree. Okay, so as long as we stay below 122.18, we cannot rule out another leg to the downside. But okay, before everybody, because everybody only focus on the 15 minutes, 1 hour, and they forget about what exactly is the larger degree outlook looks like and things like that. Now we can see if we label this as a WX, that suggests that this pattern here is a correction. Even though it goes down as a corrective pattern. So which means we can conclude the right side still remains to the upside. Now let's take a look, zooming out a little bit to get proper context what we have here. This is the 4-hour chart. I put down the W and X, the same W and X we saw on the 1-hour chart right here in the 4-hour. Now before we even talk about the 4-hour, let's go to the weekly chart, right? Or even a monthly chart. Let's see if I can get anything interesting from here. Now this is a little bit too, not sure what happened, but the data loads very slow here right now. Now we can see, if you look at it from a very high level overview on the monthly chart, and again it's loading very slowly here. Now we can see right here that if we try to draw, let's say, a trend line coming down from 2008, we got a major break, and this is not just a simple break, this is a 12-year trend line that has been broken to the upside, right? So that suggests that the larger degree trend is sort of reversing to the upside, and thus again that will tell you that I think the right side is to the upside at the moment. All right, and then again, if we go down to the more lower time frame, like the 240 for our chart, okay, now we can see that we can see right here, look at this move to the downside. Again, let me put the WX where it is in the 4-hour chart here. Now there's no question this move down here is correcting the cycle, right? You can see, I mean, with a plain eye, you can see, for example, if you try to draw a trend line, it clearly breaks below this trend line, so this cycle is finished. So now we are correcting this cycle, and so the cycle that it is trying to correct is the April low. April low is the key low here in the euro dollars, right? And look at this move down. It doesn't look like an impulse at all. It looks overlapping, corrective. You can see this is clearly 1, 2, 3, right? It's not only 1, 2, 3, it's also equal leg here as well. Typical of corrective pattern, 1, 2, 3. So ABC, WX, right? And then now looking between the Y leg, and if we can go to a full 100%, that can give us somewhere around this area here, between 120.50, 119.50, in which we could potentially end the 7 swing structure, 1 2 3 4 5 6 7, and then from here we can either go to new high again if it is bullish, or at least giving us a 3-way reaction higher, right? So yes, shorter cycle might see another leg lower as long as we stay below 120 to 18, but larger degree it is corrective. And with the problem with the corrective pattern here is sometimes it might truncate, because you remember the principle that trend extends, but correction, because it is against the trend, sometimes it doesn't go to the target that we like to see, right? So it could potentially truncate, for example, and then instead of reaching this target here, we reverse higher earlier, and so on, because it is counter trend based on this overlapping nature of the decline right here. Okay, so again, the 1 hour chart then is calling for another leg lower, as long as it can stay below 120 to 18. And then the larger degree is calling for this area if it can, right? I mean, the keyword is if it can go to a full 100%, then this area between 120.50, 119.50 potentially can see buyers from here, and then the pair can either go to new high or bounce in 3 ways. All right, so that's the update here for the euro dollars today. As always, if you do want to get regular updates on Forex, commodities, indices, stocks, and so on, feel free to check our service. We have 14 days free trial, and the link is provided in the description of the video below in the YouTube video. So I'll see you all again tomorrow, and have a nice day, everyone.